What's up everybody, I'm Jaspreet Singh, and with inflation still running hot and banks paying you next to nothing, every dollar you keep in the bank is slowly making you poorer each and every day. If you have $1,000 in the bank for 1 year, and let's assume that your bank is paying you a 1% annual interest rate, which I know a lot of banks are not even paying 1% a year in interest, but assuming your bank pays you a 1% interest a year and inflation is say 8% a year, that means over the course of the year, your $1,000 is going to grow by 1%. However, you're effectively going to lose $70 worth of buying power over the course of 1 year by saving your money in the bank. So this is a $70 loss. But now if you have $100,000 and you put this cash in the bank over the course of the year and you get the same thing, 1% interest versus inflation at 8%, now you're losing $7,000 worth of buying power just by keeping your money in the safe investment called the bank. And if you have $1 million worth of cash, and you save all $1 million in the bank, where you're getting paid 1% of interest a year while inflation is 8% a year, that means you were effectively losing $70,000 worth of buying power in the safe investment called the bank. Now at this point, you're probably getting ready to type me up something like, Jaspreet, what do you want me to do? If I take this cash and I put it under my mattress, well then I'm not even gonna get this 1% and then I'm losing all 8% worth of value. So what am I supposed to do with this cash? Am I supposed to go out and just spend it? Because now if you go out and spend this cash, at least you're not losing value to inflation. However, that doesn't solve the problem either. Because if you take this cash and instead of keeping it in the bank where you grow by 1% and you went out and let's say you bought a car and you bought this car because now you want to convert this cash into something else, well, now this car is also losing value. In fact, it's losing value faster than your cash. Now, of course, right now we're in a weird environment where sometimes cars are actually going up in value, but this is not the rule. This is just the exception to what's going on in the car market. But generally, if you go out and buy a new car, that car is going to lose 20% of its value immediately, as soon as you drive it off the lot. So if you're losing 20% worth of value by buying a car, you're better off by keeping your cash in the bank than by buying a car, because buying a car loses value faster than by keeping your cash in the bank. So what's left? But what if instead of keeping your extra cash under a mattress, and instead of keeping your extra cash in the bank, and instead of taking your extra cash and just going out buying cars, you took this cash and you bought assets like stocks or real estate or businesses, then what? Well, you might be worried about the risk of losing value there because we've seen what's been going on with stocks and crypto and asset prices crashing. You have the risk of the value of investment dropping. However, you could also see the value of your investment rise. This is where now you have to understand, how do you save your money strategically, and when you're not saving your money strategically, where do you put your extra cash? This is where you first have to understand, how do you save your money the right way? Because growing up, I grew up in a traditional Indian house where my parents always told me that you need to make a big salary by getting a good job, and then when you make a good salary, you can save as much money as possible, because saving is the way that you become wealthy. And unfortunately, that advice is very far from the truth. In fact, your savings should be there just to protect you from a financial emergency, but your savings will never be able to make you wealthy. So if you want to save your money the right way, there are 3 reasons why you should be saving your money, and these are the only 3 reasons why I think you should be saving your money. You should save your money, number 1, for an emergency. This means you want to have somewhere between 3 to 12 months worth of savings put aside to protect you against a financial emergency, and this is going to depend on your risk tolerance. If you don't mind taking on more risk, if you don't have a whole bunch of financial responsibilities, you don't got a family to take care of, well then maybe you only need a few months worth of expenses put aside for your savings. If you have more expenses, you can't take on the higher risk, you don't want to take on the higher risk, then maybe you take 6 months or 9 months or a year's worth of savings and you put that aside to protect you against a financial emergency. Number 2, you want to save money for a big purchase. You want to buy a car, you want to buy a house, you want to buy something nice. It's going to take you cash to do that, and you want to have cash put aside for that. And third, you want to save money for an investment. If you want to buy a rental property, you want to go out and invest in a business, you want to go out and make an investment purchase and need cash to do that, and you want to put aside cash for that. If you're not saving your money for one of these 3 reasons and you're just saving your money to save it, your savings are literally making you poorer each and every day. This is where now you have to understand where and how to park your money, because if you were just going to save your money, say for an emergency, you want to put your cash somewhere liquid that's easily accessible. This can be something like a bank. Now, the reason where you have to be understanding of where a bank plays a purpose is because so many people think that when you just keep your cash in the bank, it is the safe place to keep your money. It's a safe place to store your money. It's the safest place to keep your money, because at least when you put $100 in the bank, it will be $100 in a week or 2 weeks or a year. But the reality is the $100, while it's still $100 digitally on paper, the $100 can't buy you the same thing today as it could a year ago, as it could 10 years ago, as it could 20 years ago, because of inflation. And so if your bank's savings rate, your interest rate, is not keeping up with inflation, which, newsflash, it will not ever keep up with inflation. If your bank's savings rate is not keeping up with inflation, you don't want to keep all of your extra cash in the bank. This is where you want to put your cash to work outside of just the bank. Sure, it's great to keep your cash in the bank because your cash is easily accessible. You have the FDIC insurance. You have the cash that you can easily go and get. However, you need to know where you can put your cash, because you don't want to keep all of your cash in the bank. Use the bank to your advantage. Don't let the bank take advantage of you, because the way the banking system works is the banking system profits when you keep all of your cash in the bank. Because as soon as you take the $100 and you deposit it in the bank, your bank is going to take that cash, turn around, and get rid of it as fast as possible. The $100 for you, you think is an asset because you worked hard to earn this $100, and now you're going to put this cash in the bank. So you think it's an asset. However, that same $100 for the bank is actually a liability. Because for the bank, that cash is losing value to inflation, and they need to grow this cash because they want to earn interest on this cash. So they're going to take the $100 that you deposit, and they're immediately going to turn around and try to get rid of it as fast as possible. The way that they do that is by lending the money out, because this lending is an investment for the bank. That's their asset. So they turn that liability, which is your deposits, into an asset by turning around and getting rid of that money, by investing the money, by getting it out of the bank's hands, because they want you to save your money in the bank. That way they can make money off of your savings. Now, this is how the banking system works. This is why you want to understand the system. That way you can use it to your advantage. That way you can use the bank to your advantage instead of just letting the bank take advantage of you. So what does that mean now? Use a bank the right way. Use a bank to keep your emergency cash, because it's liquid, you know where to access it, and it's safer over there. Keep your cash in the bank when you want to purchase something. Keep your cash in the bank when you want to have cash to invest, or you can automatically invest your money, or you can take this investment cash, use it to pay down some of your debt. You can also use a credit union. That can also be another great tool for you. However, don't just keep all of your extra cash in the bank. Now, this is where you want to be investing your money. If you don't have an investment right now, if you're just waiting for the right opportunity, sure, keep your cash in the bank as it's parked there as a temporary place to keep that cash before you go out and actually invest your money. But that should not be the final destination. It's kind of like a bridge of where to just keep that cash temporarily, because it's an easy storage. Now, as soon as you start doing this, your banker is going to call you up and say, hey, you had a big bank account, but now your cash is leaving. Why are you taking your cash out of the bank? Don't you want to keep it safe with us? And this is where you're going to have to remember, the reason why you want to take your extra cash out of the bank and put it to work in assets, whether it's stocks, whether it's real estate, whether it's businesses, maybe it's cryptocurrency, maybe it's another asset, maybe it's physical gold. You're looking for these alternative investments. That way it's not just your bank. That way it's not just your savings account. That way it's not just your CD, because now you can earn a better return on your money. While they say that savings and CDs are a guaranteed return, it's a safe investment, it's a guaranteed to lose investment. Because when you save your cash in the bank, inflation is going to go faster than your savings rate, which means that your cash is losing value to inflation. Nobody has become wealthy by saving their money. They have become wealthy by taking their savings and putting it to work, meaning taking it out of the bank and putting it in places where your money will grow, because your money will never outgrow inflation in the bank. So this is where you have to be smart, understand where the bank's purpose is, and put your cash to work. If you enjoyed this video and you want to see the 4.5 ways that you can build real generational wealth, I made a video covering that, and you can watch the video by clicking this button right over there. Thank you for watching, and as always, keep hustling. You can build a stream of income. It's not going to be as big as owning your own business, but you can build a passive stream of income. And if you do this over time, you can build a stream of income that will help fund you, your lifestyle,